I am Eric with Muathe.com, and I greet you, beloveds, in the love and in the light of the one infinite creator. Let's take a look at markets here, September 29th, and I'm going to be revisiting the same concept. I was talking a video I did yesterday, and in yesterday's video, I was talking about the chart for wicks. Now, this is the same setup that we are seeing here. A couple of stocks I'm going to mention in this video. The first one here is BILI, and we can see here that there's the potential for breaking below recent weekly lows. Now, that could be a problem, especially if, and it's a big if, it's a big ask, if the general market really starts dropping, these types of setup are gonna yield the biggest movers down. So be on the lookout. This type of setup, not good, because they have already come off their highs. You can see the highs here in early 2020. This instrument's already down. Generally speaking, the stock market itself is trading at this area of the chart, top right. So already has been leadership down, but a fresh break really accelerates the momentum downwards. Again, this is based on the concept which I call the ultimate Muathe sell signal, which, if you're familiar with the other opposite method, which I call the ultimate Muathe breakout, links are going to be in the description. We can see here the risk for lower prices is elevated because the RSI is essentially at 3-year lows, and one of the MACDs is essentially at 3-year lows. Also, the potential for dropping below RSI 50 on the monthly could lead to a big down move lower. Keep in mind, this can actually become a support area if the market can hold this RSI 50 level on a month-to-month basis. Remember, we are coming towards the end of the month here. If we get a monthly bounce back above 50, this can stem the slide. Mainly depends on the general market. If the general market is in a mood to go down, stocks like this one are going to see massive plunges. The other stock I want to mention, again, similar setup, is FATE. Remember, S&P 500, Dow, and NASDAQ essentially coming off their highs. They're trading around here on their charts, but this instrument essentially has been off its highs, and so we can say, even as of right now, has still been one of the poor performance relative to the market, and now breaking below recent weekly closing lows. This is a fresh break. In fact, it is following through after last week's break and now the second week. If we take a look at the monthly chart for this instrument, we can see the minimum requirements are being met. The RSI essentially probing 3-year lows. One of the MACDs is already at 3-year lows. So if the general market is in a mood to go down, these are gonna be the leadership on the way down. In other words, they are gonna experience the biggest, fastest sell-off in the market. By the way, we see a good example of the 2 red flags method that I've been discussing on my channel. There was a failed breakout. We take this weekly closing low, and even here, this was a sell signal. No need to own that stock since that price level in the mid 80s. No need to be part of this sideways action after that. All this was sideways action that went nowhere, and now you're seeing a fresh break. But in terms of the 2 wrongs method, again, links are going to be in the description of this video for that concept. This was where you needed to get out. Let's take a look at one more, and it is another stock, pretty essentially giving the same look as the other instruments, KRYS. As of this instant, this moment, right now, looks like it wants to break this recent August weekly closing low. And already one of the MACDs is essentially trading at 3-year lows. The other MACD is getting close. So this meets again the minimum requirements for the ultimate Muathe sell signal. Now, what can save this instrument from plunging is a general market that stabilizes. That's the most important thing. The general market would need to stabilize, and this instrument would have to hold the RSI 50 so it can coil higher. Otherwise, breaking down to 3-year lows is going to set the stage for a massive sell-off, which, by the way, brings me back to the weekly, and yet another good example of the two wrongs method. You get the first red flag with your failed breakout. Remember, this plays out over and over again. You take the lows of this base, you break through it. The sell signal was here. No need to own the stock after that. You would have saved yourself all of this anguish. Sideways to down. Who wants that? Again, links are going to be in the description if you want more information about the concepts mentioned here. I am Eric Muathe, and it is a great joy to leave you in the love and in the light of the one infinite Creator. Go forth, therefore, rejoicing in the power and in the peace of the one Creator. Adonai.